If you own a rental property, you're probably thinking your tax return is okay, not perfect, but acceptable. You submit your data, your tax advisor prepares the tax return, you sign it, and then everything goes smoothly. Honestly, most investors stay in this cycle for a long time, until something starts to feel off. The tax burden seems higher than expected, cash flow isn't meeting initial projections, or someone asks you a simple question about your tax return, and you suddenly realize you don't fully understand how those numbers were calculated. At this point, the question usually changes. It's no longer, did my tax advisor file the tax return on time? But rather, is my rental property tax return really prepared correctly? In this video, I'll show you how top real estate tax advisors prepare rental property taxes. Not the perfect version from those online checklists, but the real behind-the-scenes process. Because when your tax process is flawless, it doesn't get you excited. It just makes you feel like everything is in order, which is exactly what you want. However, most people, even tax advisors, see it that way when they look closely. The Houston real estate market operates very differently. Property taxes change rapidly. Property values are reassessed after purchase and renovation. Refinancing is also more frequent. As portfolios grow, more businesses are involved. Good tax advisors understand that your rental property tax return is a separate system. Most people don't try to integrate it into the usual March or April personal income tax filing process, as the latter mainly revolves around pay stubs, child benefits, interest statements, and charitable donations. And it all starts with understanding the story behind the property, not just the numbers. How good real estate tax advisors really work. This is the first major difference. Good tax advisors start with the documents, while exceptional tax advisors start by asking questions. They want to know, how many properties do you currently own? What changes have occurred this year? Have you bought or sold a property? Have you refinanced your assets? Have you undertaken any renovations? Have there been any changes in the use or management of the property? Because filing a tax return is more than just entering numbers. It requires clearly and understandably explaining the situation to make your tax return truly reasonable. Keep up with your accounting. This is often where tax returns go wrong. The best property accountants never wait until the last minute in April to frantically tidy up their accounts. They review their accounts in advance, looking for patterns and noting any discrepancies. For example, sudden and unexplained increases in expenses, categories that change every year, mixing personal expenses with rental accounts, and missed or double-reported property taxes. This isn't because they're nitpicking, it's because accurate tax returns are built on accurate data. Most investors only realize a crucial fact when it's too late. Slow down about depreciation. This is one of the biggest differences between a mediocre accountant and a professional accountant. Most accountants simply rush through setting up depreciation, entering the purchase price, selecting the depreciation period, and moving on to the next step. The best real estate accountants, however, carefully consider every detail. Because depreciation decisions have far-reaching consequences beyond the current year, they affect future taxable income. They affect refinancing decisions. They affect exit strategies. They also affect depreciation recovery upon sale. Good accountants don't blindly pursue depreciation. They weigh depreciation against the planned holding period of the property and the investor's plans. Now, Houston's property taxes are the key issue. Many investors think property taxes are simple. Not at all. Good real estate accountants don't just deduct taxes already paid and call it a day. They pay attention to the following: the timing of the tax assessment, the timing of the tax payment, whether any appeals have been filed or whether the property value has changed. Because property taxes affect more than just last year's earnings, they affect cash flow and prepaid taxes. Anyone who ignores this connection risks turning a potentially good deal into a frustrating failure over time. Let's move on, talk about company structure, but this time a little differently. Good real estate accountants don't get hung up on company names. They focus on how the money actually flows. Which company is responsible for collecting rent? Which account is responsible for paying various expenses? How are the owner's contributions recorded? How are profits distributed? Because if funds flow through the wrong channels or lack the necessary documentation, deductions are difficult to justify and problems are hard to explain. A clear structure does not mean complexity, but rather transparency. As your portfolio grows, everything changes. Once an investor owns more than one or two properties, A one-size-fits-all approach to tax filing is no longer appropriate. Good accountants focus on the operation of each property. How is each property performing? How have expenses changed? How has depreciation changed year by year? This helps with future decisions, whether it's selling a property, making a 1031 trade-in, refinancing, or bringing in a partner. If the data is accurate, these decisions feel under control. If the data is inaccurate, everything feels rushed. Now let's talk about prepaying taxes. Prevention is better than a cure. Good real estate tax advisors don't wait until April to start dealing with their tax burdens. They plan. And they ask themselves, will my income change this year? Will property taxes increase? Do I have any plans to sell or refinance in the near future? They help investors adjust to prepaying taxes before penalties accumulate. This is true tax planning, and it's crucial. Take a break and start a new chapter. Preparing your rental property tax return correctly offers several advantages: less stress during tax season, more predictable cash flow, and a lower frequency or even complete elimination of unexpected events. Most importantly, it reflects an investor's attitude towards tax filing. This is precisely what makes Houston's top real estate tax advisors unique. They not only prepare the returns, but also develop processes to best support your portfolio. Rental tax filing is never about speed, finding the biggest deduction, or simply copying others. It's about consistency. This consistency applies to your property, accounting, tax procedures, and long-term strategy. When all these elements are aligned, taxes are no longer a threat but a manageable asset. If you're investing in real estate and want rental tax filing to truly drive your growth rather than just be a formality, then you should take a closer look at your tax practices. Visit gavtax.com to learn how a professional real estate tax advisor works behind the scenes. Proper tax handling won't hinder your growth. It will empower you. Thanks for watching. See you in the next video.